next few minutes and then have a little bit of time for Q&A and discussion. So the question is, can cross-border trade transform Africa? I mean, I really mean transform the continent, not just reform, not just improve things, but unleash the full potential of the continent that we have. And the subtitle here, as you can see, it's a strategic vision for sustainable prosperity. And the answer to this question depends on our vision. So, can cross-border trade transform the continent? There's a yes, there's a maybe, and there's a no. So let's look into it very briefly. The yes is what I want and what I want to present to you today. That is unleashing the full potential of the continent. There is a no, which is the current status quo, unfortunately, which is continuing to rely on external foreign direct investment, continuing to rely on the traditional engines of job creation, on the traditional engines of economic growth, which tends to be extractivist. The maybe is related to the Continental Free Trade Agreement platform, which we already have. Maybe in the sense that it is one component of unleashing the full potential, but without strategic long-term transformative vision that primarily unleashes the industrialization potential of the continent, then that maybe is really the best we can do. So let me go into the yes part, so we can aim high and aim for unleashing the full potential. So from a transformative business perspective, and if we truly want sustainable prosperity, you want to unleash the growth potential. You want a continent or a market with rising purchasing power. You want a market that has a large consumer potential, which we do have. We're the size of India, the size of China, potentially. You do want a continent or a market with a young labor force, which we do on the continent. We're the youngest labor force on the planet. You want a continent or a market with rising productivity potential, and that is definitely on the horizon for us as a continent to unleash this potential. And you want a market or an economy that has the building blocks of economic activity in terms of infrastructure, energy, transportation, water, sanitation, ITC, logistics, education, and vocational training pipelines that can feed into a growing economy with the growth potential that we want. So this is all of the potential for a successful, thriving economy for several decades ahead is available to us. The question is, how do we unleash this full potential? And I'm saying this from a business perspective, not necessarily from just a development perspective or a public policy perspective. In order for business to thrive, you need to have all of these components or most of these components. And where we have what it takes to unleash this full potential. But we also have challenges, and this is where we need to be very clear about how we shift gears and how we transform the pathway that we have ahead of us. And some of you may have seen this report that we published a couple of years ago, almost now, Just Transition: A Climate, Energy, and Development Vision for Africa, which is available on our website, justtransitionafrica.org, both in English and French. This report was produced by the Independent Expert Group on Just Transition and Development, which was convened by Dr. Yuba Sukona of Mali, who at the time was the vice chair of the IPCC. And Dr. Yuba asked us to do two things. One is to produce a short report. He said nobody reads long reports anymore. And we failed. We produced almost 100 pages. And number two, he wanted to produce this really quickly, and it took us almost a year to produce it. But at the end of the day, he was fully satisfied with the final result, and it was very well received on the continent. And now we wrote this from a Pan-African perspective, and it was very well received across the global South because, as you will see, the issues that we struggle with in Africa are very similar to what the rest of the global South struggles with. So the key message from this report is that we wanted to produce a vision that can simultaneously address the issues that we have on the climate front, on the energy front, and on the development front. And these are issues that are typically siloed. When you talk about climate, you're not allowed to talk about development or energy. When you talk about development, even in the multilateral space, when you're negotiating for these issues, you're not allowed to cross fertilize these issues in multilateral negotiations. So the idea here, the basic idea is that if we as Africans don't have a long-term strategic vision for ourselves, I guarantee you we are already part of somebody else's strategic vision, whether it's the United States or Europe or China, and every major economic bloc has every right to have a vision for itself. And every major economic bloc has every right to use its economic diplomacy and its incentives to nudge everybody else to where they want to see them within that vision. And what we wanted to say in this report, and so do we. We as Africans, we have the right to develop our long-term strategic vision and to use our own economic diplomacy and our own collective leverage points to nudge ourselves, to reposition ourselves away from the bottom of the hierarchy. Why? Because traditionally, Africa and the rest of the global South has been assigned a particular role in the global economy. And this assignment and this role that was imposed on us, this was imposed on us during colonial times, can be summarized in three basic roles. Number one, we're supposed to be the place for cheap raw materials for the industrialized world. We continue to play that role to this day. Number two, we're supposed to be the consumers of industrial output and technologies from the industrialized world. We continue to play that role to this day. And number three, and most importantly, we're supposed to be the place where obsolete technologies, assembly line manufacturing that is no longer needed in the industrialized world, is outsourced to us under the label of development and cooperation and job creation. But effectively, what it does, it permanently locks us at the bottom of the global value chain, at the bottom of the hierarchy. And now let's be very clear that these are colonial roles that were imposed on us. We continue to play the same colonial role to this day. Let's be very clear that colonial roles in colonialism was a system that was not designed for development. It was not designed for democracy. It was not designed for justice. It was not designed to achieve the sustainable development goals. It was not designed for any of the major important goals that we want to achieve today. It was a system that was hierarchical, violent, extractive, and abusive and non-democratic. So why do we today somehow expect the same economic design somehow to produce democracy and justice and prosperity and development and sustainable development or a just transition for the African continent? The simple answer is that it cannot by design. So any vision that we design for ourselves that doesn't help us escape these three major colonial economic roles is going to fail because it's going to keep us trapped in the same system. So that's really the starting point of our analysis. If we're serious about transforming the continent, we have to undo these structural traps. And sometimes they say a picture is speaks louder than a thousand words, and this is certainly one of them. And you can see even today's kind of dash for critical minerals on the continent in the name of greening the economy, decarbonizing the economy, is really, repeating the same kind of extractive colonial kind of relationship that we've had with the rest of the world under some kind of greenwashing label. And that's why an important message that we deliver in this context is that we cannot decarbonize a system that hasn't been structurally and economically decolonized yet. And we'll see, we'll unpack this message as we go. Similarly, you can't really democratize a system that hasn't been structurally and economically decolonized yet. And many people these days talk about de-dollarization. You can't even de-dollarize a system that hasn't been structurally and economically decolonized yet. So let's zoom in on the key structural deficiencies that we have as a continent, as a global south in general, and then see where the levers of transformation will need to take place. Of course, there's the issue of external debt, because this is the burden that really consumes quite a bit of the fiscal policy space that we have to invest in health or education or anything that involves economic transformation. But my message to you here is to think of external debt as a symptom of deeper structural issues that can be summarized in three major points. Number one, energy deficits. Number two, food deficits. And number three, low value added manufacturing deficits. And I'll explain each briefly. And now you will see where cross-border trade in business in general on the continent can either enhance uh, these deficiencies or help us escape from these deficiencies. When I say energy deficits, I include our biggest oil exporter on the continent, Nigeria, then Angola is number two. Nigeria, until very recently, when the Dangote refinery opened recently, Nigeria imported 100% of its gasoline from external markets. Angola, the second largest, to this day, I think imports 80% of its fuel from international markets. And that is by design, not by accident, because we've always been denied access in the old energy system, fossil fuel system, access to technology to look for oil, to drill for oil, and to refine oil. And in the new energy system that we want to um, put in place, the renewables energy system, we're still denied access to the manufacturing technology, to use our own critical minerals to deploy renewables at scale, and we're denied access to financing. Africa today attracts less than 2% of global financing that goes towards renewables. And we can come back to this question later. On the food front, Africa today, according to UNCTAD, we import 85% of our food, 85% of our food. And less than 100 years ago, we used to be the breadbasket for the world, for colonial powers. And that transition or transformation was not by accident. It was by design, because as soon as we became independent, we started to gain independence, the former colonial powers realized that they are actually food dependent and food insecure at the time. So in Europe, for example, 1955, when the Europeans met to establish the foundations for the European Union, when they signed the Treaty of Rome, they acknowledged that they have a food security problem. And they started working towards what became known as the European Common Agricultural Policy, CAP for short, which was introduced in 1962 and is still in place to this day as a major pillar of European Union, of Europe's food sovereignty system. And the idea here was for European countries to heavily subsidize the production of core crops, wheat, corn, barley, and so on. And that wasn't only Europe. The former Soviet Union did the same, which is why Russia and the Ukraine dominate in the grain industry. And the US, Canada, Japan, Australia, all major economic blocs did this. What it did for our farmers is that we couldn't compete with the cheaper, more subsidized wheat and corn and barley coming from the global north, from the industrialized world. So our farmers give up the production of core crops and they had to specialize in producing cash crops, coffee, tea, tobacco, fruits, right? Leafy greens for exports, complementary food items, but not the core food items. And when you do this as a continent or even as a country, it means not only an economic problem for you, but it's also an ecological problem we're discovering today in the context of the climate problem. Because when you start to produce for the taste of your consumers in Europe, for example, you start to use non-native crops. And non-native crops are not acclimated to your soil, to your climate. So they need irrigation. So you have to build the irrigation system, which is expensive and often imported. Number two, you have to use more fertilizers and pesticides, all of which you have to import. And when you use fertilizers and pesticides on your soil for 30 or 40 years, you essentially burn the fertility of your soil. And now you have to double down by bringing in more potent non-native seeds, more potent fertilizers and pesticides in order to increase your yields. And now you're trapped into an agricultural system that is just draining your resources, destroying your land, and setting you up in a debt trap and never giving you actual food security. So this is a fundamental problem that we have to deal with today. And number three, and most importantly, the kind of manufacturing base that we developed on the continent, or that we were allowed to develop on the continent, is the kind where you have to import the machines, you have to import the fuel to power the factories, you have to import the intermediate component to be assembled with low-cost labor, and we even import the packaging. So we end up with a manufacturing base that produces low value added content for export. And what we import is high value added content. So you can double, triple, quadruple even your exports with trade agreements and partnership agreements. At the end of the day, you're still locked at the bottom of the value chain. So now you have three structural deficits in your economy: food deficits, energy deficits, and manufacturing value added deficits that translate into a trade deficit structurally, year after year, decade after decade. And as you all know, an economy with a trade deficit has a weaker currency. So the value of your currency, if you're in South Africa, the South African rand, right, will depreciate relative to the dollar, relative to the euro. And with a weaker currency, anything I import the next morning will cost me more, right? Because my currency is weak. So then I'm literally importing inflation in the most sensitive areas of my economy. So we have food imports become more expensive, fuel imports become more expensive, pharmaceutical or medical products become more expensive. So now I'm importing inflation in the most sensitive area of my economy. I'm basically setting up my country for social instability, right? Because the most vulnerable people can't afford this higher cost of living. So this is what our governments do then. We step in immediately to protect the most vulnerable, which is what you have to do. So we do it as a band-aid solution by subsidizing food, subsidizing fuel, subsidizing medical services as much as possible. And it's unsustainable to do this for decades. The second thing we do is we ask our central bankers, because they're in charge of stabilizing inflation and stabilizing the exchange rate. We ask them to defend the exchange rate, stabilize the exchange rate. And how do they do it? They do it in the short term by borrowing more dollars and therefore feeding the external debt trap. And once you accumulate a massive amount of external debt, it's your lenders who impose conditionalities now on how you use that money that you're borrowing. So they want to prioritize now economic activity that generates dollars in order to pay them back. So any investment that will enhance your food sovereignty to produce wheat or corn or barley for your own domestic needs is not going to be supported because it's not going to generate dollars. But if you're investing in exporting more coffee, more tea, more tobacco, more, fruits for the global north to consume, they will support that because those exports generate dollar revenues to pay them back. And therefore, they actually help finance your food insecurity. And we start to create all kinds of incentives for local business people to invest in producing strawberries for exports, tomatoes for exports, any kind of, export-oriented thing. In countries that don't even have water resources to sustain their economy, you find them producing water thirsty crops like strawberries, like tomatoes, and so on. In the energy system, you'll find investors who are willing to invest in renewables in your economy, but as long as it's export oriented. So you produce renewables to produce green hydrogen for exports to Europe, or if you're in North Africa, to produce renewables that you export through undersea cables, or renewables that will feed into a green industrial zone to do assembly line manufacturing that is export oriented. So it's the same economic model that we describe that we have since colonial times that is now being reinforced because of the debt trap and because of the conditionalities imposed on us. And this is the vicious cycle that we need to break free from. Now, let's put some numbers so that we can see where we are. This is Africa's exports as a continent. You can see you can eyeball the problem, right? Just by looking at our exports. Notice the total volume of Africa's export is 767 billion. Now look at Africa's imports, 886 billion. And so we have a structural trade deficit on a continental scale. And look at the composition of our imports, right? You can immediately eyeball the problem in terms of food, energy, and value added of manufactured products. I can show you country after country after country. I'm not going to do that. I just picked Malawi as a country from your region, from the SADC region. Malawi's exports is 1.2 billion. Malawi's imports is 2.7 billion, a structural trade deficit. And you can see the composition of imports and exports. It's a classic kind of problem that I'm describing here in terms of food, in terms of energy, in terms of value-added content. And what this does, it creates this constant pressure on the value of the Malawian kwacha relative to the dollar. You see the steady decline in the value of the currency and the exchange rate. And what it does is that it makes all of your imports more expensive, right? And as a result, you see this exponential growth in the external debt, short-term and long-term debt. And notice the reason I picked Malawi specifically for this, notice what happened around 2005, 2006. There was a little bit of debt relief that was given to Malawi. Notice the debt relief brings down significantly the amount of the debt, but as soon as you move 1 or 2 years after that, you see that the acceleration of external debt continuing with the same, vicious growth, which means for Africa as a whole, for the global South as a whole, we can cancel the entire debt stock of the global South today. I guarantee you in 10 years we'll have another debt crisis. Why? Because the engines of these structural deficiencies are still in place, the food deficits, the energy deficits, and the value-added deficits. So we need to attack the root causes of the structural deficit. And that's the kind of transformation that we want. And this is the kind of transformation that African business leaders need to prioritize in order to accelerate the escaping from these structural deficits. Otherwise, African business leaders can, without necessarily any intention, can participate in the economic entrapment of the continent and can participate in the existing momentum that is leading us into this quagmire. And that's why I think this conversation today is very important so that we can all be pushing in the right direction in order to unleash the full potential that we have. On a global scale, of course, if you take what we looked at on the African continent, I wanted to focus on the green line. If you divide the world into global south and global north, and you net out all global financial transactions, that includes exports, imports, foreign direct investment, remittances from workers, even illicit financial flows, payments of debt, interest payments, everything included. The net amount is that green line that you see there. And the last data point we have is $2 trillion moving from the global south to the global north. That is money moving in the wrong direction. And that is sometimes surprising to people. Notice that green line has been accelerating over the last few decades. To me, it's not surprising because the colonial economic architecture at a global level was designed for extraction of wealth. So it's producing exactly what it was designed for. When I say global economic architecture, it's the financial architecture, that's the World Bank and the IMF and everything that goes around them. It's the trade and investment architecture, that's the WTO and all the other major trade agreements. And it's the international taxation architecture, which for a long time was in the hands of the OECD countries. And now, thanks to the Africa Group and the vote we had in the UN almost 2 years ago, we're now transitioning into creating a UN tax convention framework with which is a process of really decolonizing international taxation. So unless we transform that architecture, it will continue to produce these results. And when it comes to the climate space, just to put the numbers on the board so we know what we're dealing with, you have $2 trillion moving in the wrong direction. Next to it, you have the $300 billion that was promised in COP29 to be delivered in 10 years, mostly loans, actually, not grants. So it will enhance the economic entrapment and the debt trap that we have. Next to it, you have the Green Climate Fund, which last time I checked was about $16 billion in that Green Climate Fund, not even close to actually creating the kind of accelerating the transition that we want. And then the tiny little dot you have there is the loss and damage fund, which has about $700 million, million with an M. And of course, when you look at the big four extracting from the continent, the big four in terms of fossil fuel companies, you can't even find a single climate fund that matches the annual profits of these companies. So to me, this is the summary of climate finance, which means we are not serious about addressing the climate crisis. We are not serious about this concept of a just transition. And I always see people taking pictures of the slide, and I ask them, can you take a selfie with the slide and send it to your favorite climate negotiator? So when they go to COP, we know where the starting point for the negotiation should be, because the numbers are not even close. So the structural solutions, Pan-African Global South cooperation for strategic investments in food sovereignty and agroecology, renewable energy sovereignty, and high value added industrial policies. And here I want to highlight a couple of things. Food sovereignty. Notice I didn't say food security, because food security to me is the most dangerous post-colonial concept that was introduced in the global south. Because in the colloquial sense of the term, of course, we want food security. Who doesn't want food security? But food security is a technical term. It means you secure the caloric nutrition of your people, either by producing the food yourself or by, which we don't do anymore, or by buying it from abroad, which we do, which is part of the problem, or by borrowing money to buy it from abroad, which creates a debt trap that we're in, or even worse, by receiving it as food aid. Food aid is the worst thing you can do to your farmers because they can't compete with free food. So food sovereignty means you use native crops. You prioritize the production of core crops for your own actual food security in the colloquial sense of the term. And this happens to be not only a solution to the debt problem, but this happens to be a climate adaptation solution. So it's a win-win. Renewable energy sovereignty, not for exports, but to deliver to the 600 million people today who have no access to electricity. How can we have development and industrialization if we don't have electricity production, enough electricity for our consumers and for the energy intensive industries that we want to build on the continent? So prioritize renewable energy sovereignty. And as you'll see from the data later, Africa has the largest potential in the world for renewables. And high value added industrialization, not just high-tech assembly line manufacturing, by prioritizing renewable energy infrastructure to be deployed on the continent, clean cooking infrastructure for the 950 million people on the continent inhaling toxic fumes on a daily basis, mostly women and children, and green transportation infrastructure, transportation that is built not outwards towards the ports for exports and extraction, but the inwards logistical links that will actually make trade successful, that will make trade more affordable internally on the continent. And those are the building blocks of development and prosperity that we want. And on a global scale, of course, it's about transforming the global economic architecture, not just reforming it. And that is the international trade, investment, financial architecture, and taxation architecture that I talked about earlier. Now, when it comes to industrial policies, notice I insisted on this to be called Pan-African, right? Pan-African, not just because we like each other. Of course, we like each other, but unfortunately, we end up using the term Pan-Africanism as this nice, fluffy term that we throw around when presidents take pictures together in Addis and have the red carpet and all of that. But nobody really, you know, adopts the meaning, the true meaning of Pan-Africanism. And here I argue that Pan-Africanism is an economic necessity. It's not just a nice thing to say to each other, because to industrialize, to produce high value added content, to replicate the entire value chain of renewables or clean cooking or transportation on the continent, no country on this continent can actually do it alone. Because if you try to industrialize alone, if you're my country, Tunisia, a market of 11 million consumers, if you're Zambia, a country with 20 million consumers, or any other economy, even the largest one, Nigeria, you're still too small. Why? Because industrialization requires economies of scale. And economies of scale, you cannot have them country by country. And if you attempt to industrialize alone, you end up manufacturing a small component in somebody else's industrial policy. So you're locked at the bottom of the value chain, which is what we do currently. We have in every country in Africa, we have a Ministry of Industry and national industrial policies. And almost all of them, when you look closely, they end up producing a small component in somebody else's industrial policy. But collectively, as a continent, we do have the economies of scale. Even at the regional level, the SADC region, the East Africa region, and so on, we do have enough regional market size to actually have joint industrial policies, not national industrial policies. So that's why I say Pan-Africanism and Global South cooperation, when it comes to industrialization in particular, is extremely important as an economic necessity. So there's a spectrum of industrial policies. There's one end of the spectrum that produces economic entrapment, and the other end of the spectrum that produces a transformation that we want. Unfortunately, we're still on the entrapment side, producing low value added content. And here's a quick summary of what I already described on the low value added content. You import the machines, the intermediate components, the fuel, the packaging. We have low labor costs. On the higher end of the spectrum, where we want to be, we want horizontal linkages via domestic, regional, and global industrial strategies that are carefully articulated and planned, with strong focus on research and development, intellectual property rights, automation, robotics, AI, advanced technical vocational skills, innovation, design, marketing, competitive edge, finance, insurance, and strategic management of logistics and global value chains. Of course, there's a lot in between the economic entrapment and the economic transformation, but we want to create a pathway that leads us to this end of the spectrum. On the economic entrapment side, you have weak labor bargaining position because we're racing to the bottom. You have weak social and environmental protection because we're racing to the bottom and we're in a debt trap and we're not in a position to improve things, right? On the higher end of the spectrum, you have stronger labor bargaining position, you have stronger social and environmental protection, and you have outsourceable jobs that tend to weaken workers both in the global south and in the global north. And that is the link here. The higher, the industrialized countries have the quote unquote the advantage or the privilege of getting rid of the low value added manufacturing by weakening their own workers, by the way, and relying on the low labor cost that we have in the global south. And you basically have in today's world, you have a greenwash, rinse, and repeat of the same model. But I hope this sketch gives us, a little bit of clarity in terms of where we are, where we want to be, and then everything in between, because it's not kind of either or. There's a spectrum. There's a process in between. Now, the global south renewable energy potential, as you can see, Africa has the largest potential in the world. According to IRENA, the International Renewable Energy Agency, their latest report on Africa from 2 years ago, it's available online, you can read it, basically said that with existing renewables technologies, not new innovations and new science fiction type of renewables, existing renewables, Africa can produce by 2040, can produce 1,000 times its anticipated energy needs from renewables and completely replace all of the continent's fossil fuel exports. 1,000 times. That is the potential that is technically within reach. 2040 is the day after tomorrow, basically. So despite this full potential, we're denied access to financing, we're denied access to the manufacturing technology. And this is not by accident. I mean, for a lot of people, it seems like this is puzzling. Why are we not unleashing this potential? Why are our partners in the global north not investing heavily in unleashing this potential? And I'll tell you why. Because what we perceive as an opportunity, as a win-win, unfortunately, outside the continent, is perceived as a threat to be eliminated, as a risk to be minimized. Because if you take today the economic and geopolitical weight of the OPEC countries, the oil exporting countries, and you multiply that by 1,000, then you understand that it's a real threat, right? Especially with how rich the continent is in terms of potential. It's a threat because it can disrupt the economic and geopolitical hierarchy that we have today, which is the colonial hierarchy, because it will help the African continent finally escape the bottom of the hierarchy. And that is, from a geopolitical standpoint, is not allowed. And I'll come back to this point. And then we have to figure out how do we actually compel the rest of the world to accept the fact that we must escape the bottom of the value chain. This is the map of the world with some of the key strategic minerals. As you can see, the majority of those are in the global south, and Africa is home to the vast majority of these critical minerals. So we have all the resources that we want, the youngest labor force on the planet. We have the economies of scale at the continental level, the economies of scale at the regional level. We have this tremendous potential for growth. What we lack is access to the manufacturing technology to unleash this full potential. And this is where I started working on this thing that I call the geopolitical bargain of the century, which is a title of a little book that I'm producing soon, hopefully by the end of this coming month. And it's a call to action, essentially, that I'm writing to African and Global South leaders, to presidents. And I'll explain to you why it has to be presidents, not ministers, not diplomats, and why it has to be a geopolitical bargain. Because when I started working on this a while ago, in 2023, right before COP, I received a text message from a good friend who's a senior editor at a major newspaper, English-speaking newspaper that I guarantee you all of you read on a regular basis. And in this message, the senior editor told me, "You cannot believe this off-the-record 3-hour interview I just had with a senior official in the OECD in charge of industrialization about the questions that we're talking about today, about development, industrialization, transfer of technology, sharing of technology to unleash the potential of the global south of Africa in particular." He said, "The gist of that conversation is the following. Nobody in the global south is allowed to industrialize without our approval, without the approval of the industrialized world. Precisely because the industrialization of Africa, the industrialization of the global south, is perceived as a threat, as a geopolitical threat to be managed, to be minimized. And when we look at history, the countries that were allowed to industrialize up to a certain point were only allowed to do so for geopolitical reasons. Think of Israel, think of Singapore, think of Japan after the war, think of Germany after the war, right? These are countries that were allowed to industrialize up to a certain point because they served a specific strategic role in the global geopolitical map for the US and Western Europe. So we as Africans have to be fully aware of this, that this transfer of technology thing is a red line. And that's why after COP29 in Baku, after I saw the negotiations and I saw that the global north refused to accept the kind of climate finance that we were asking for, because we were asking for transformative climate finance. It was very clear to me that COP29, which was supposed to be the climate finance COP, right? That's what they called it. It was very clear to me that COP was not about climate finance. It was not even about climate. It was about an economic and geopolitical hierarchy that is not going to be disrupted. Right? That was really the red line in those negotiations. So now the burden is on us in the global south, in Africa in particular, to figure out a strategy to compel the other side to act and think differently, to actually share technology in a win-win scenario. And that is the context in which this geopolitical bargain of the century comes from. So first, we have to be very clear that Africa has a plan for Africa, right? This is not a European plan for Africa. This is not the Matai plan for Africa. This is our vision for our own development. And this is what I call the $0 Pan-African joint industrial policy. So we don't actually need external financing. We need in-kind contribution in the form of joint ventures, sharing of technology, because we have the resources. We pay for our resources in our national currencies. We pay for our labor in our national currencies. Where we usually need dollars and borrow dollars and get into debt traps is to import the manufacturing technology. And when you import manufacturing technology, you become forced into producing something for export rather than producing the building blocks of your own development. So here we're looking at transfer of technology and sharing of technology via joint ventures. So imagine for a second, let's say the SADC region, the block of 16 countries in the southern part of Africa. Imagine we have political commitment at the highest level, meaning presidents and heads of states in the SADC region who agree on co-designing a joint industrial policy with pre-negotiated distribution of the value chain, with pre-negotiated terms of extractivism, pre-negotiated ownership structure, pre-negotiated agreements on protecting labor rights, environmental rights, and the rights of communities on the front lines of extractivism, because we don't want to reproduce the existing hierarchies and the existing problems. Let's imagine for a second that we have that level of political commitment. And this is our homework. This is where the push from below, this is where the mobilizing and organizing comes from to convince our heads of states that we are ready for takeoff. So imagine we have that commitment. Then that block of countries, imagine going to a country like China and saying, look, we give you the bargain of the century. Here's the deal. If you agree to share technology, to unleash this potential. Let's say just for solar panel manufacturing. If you agree to transfer technology, come in as a joint venture in-kind contributor with contribution, obviously, to prepare the pipeline of skills and vocational training that is needed for this takeoff with South-South cooperation. Here's what we give you. In 10 to 15 years, you double your industrial footprint globally. In 10 to 15 years, you double your geopolitical weight globally, and you secure your access to these precious minerals that everybody's panicking about. In addition to that, if we succeed at unleashing this real development and industrialization potential, we, the global South, let's not forget, we are the global majority, meaning we are the largest market on the planet, except today we don't have the purchasing power yet to compete with the US or Europe. But if we truly develop and industrialize, you would have access to the largest market on the planet with rising purchasing power, with youngest labor force on the planet. And that is something that any economic or trading partner wants to have access to. I guarantee you China will accept the bargain. But this is very important. The idea here is not to put China at the top of the hierarchy. The idea here is to trigger the bargain with China, to trigger the process of real development and industrialization via transfer of technology, then get the second bargaining chip that we need, and now go to OECD countries, Japan, European countries, the United States, and say, look, we offer you the same bargain, right? We want to offer the same bargain to countries that can help us replicate the entire value chain of manufacturing and deploying wind turbine technology on the African continent on our terms. And we go to Germany, they say, no, 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 we don't transfer technology. We go to France, they say, no, we don't transfer. We go to Japan, say, we don't do that. Well, at that point, they can't really say no because they know that we do have the China option. So if they lose, they allow China to triple its economic and geopolitical weight, and they become excluded even more from the biggest business opportunity in the history of the world, the biggest market on the planet. So of course, at that point, they have to accept the sharing of technology on terms that we establish. And then say we want high-speed rail, right? To build the logistics of transportation. Go to Spain and say we want access to your technology, or France or Japan. At that point, they can't give up the largest market on the planet, the biggest deal in their history. At that point, they have to accept on non-extractive, non-abusive terms. And the idea here, therefore, is not to position any major bloc at the top of the hierarchy, but rather to position Africa and the rest of the global South at the center of a new international economic order, at the center of a new, truly multipolar world of peace, justice, and sustainable prosperity. And a lot of these ideas, believe it or not, have been introduced more than 50 years ago, actually exactly 50 years ago, in this report, for example, called What Now? Another Development, which I'm happy to share the link to. A lot of these ideas were silenced, I should say, 50 years ago in the context of the new international economic order movement. And that is in this context that my colleague my colleague Andres Chiriboga and I published this recent paper just a couple of weeks ago with the Institute for Economic Justice in South Africa on how do we develop a coherent framework for sovereign debt and economic transformation in the global South? And the last section of this paper, which is available online, is a sketch or an outline of this geopolitical bargain of the century that I described here today. So to conclude, the time to act is now. The public crisis that we're dealing with calls for urgent, bold, and radical action. Radical not in the political sense of the term, but in the literal sense of the term. meaning going to the roots of the problem. That's what radical means. Because if we're not going to the roots, then we're operating at the surface level. That's what we call superficial intervention. So superficial intervention is going to reproduce the status quo. The current geopolitical and trade disruptions that we're living in today, these are actually an opportunity to organize and reposition Africa and the rest of the global majority. Yes, it's disruptive, it's painful, but it's only painful if you don't have a way to pivot, if you don't have a way to reposition yourself. And what I'm arguing here today is that there is a way to take advantage of this opportunity, but we have to be organized, not as individual countries, but as blocks of countries. And again, as I said earlier, national industrial policies will fail unless they are linked with regional and continental value chains. And this is where the business community must insist on not being part of the problem, that is replicating or producing small components in somebody else's industrial policy, but insist on coordinating industrial policies across borders in a coherent way so that we create high value added and we retain high value added on the continent rather than export outside the continent. And I insist on this idea that Pan-Africanism, Global South unity, and even Global North solidarity, these are the economic and geopolitical prerequisites for development, industrialization, and a just and equitable transition in a new multipolar world of peace and sustainable prosperity. And I truly believe that this better system is within reach. It's like the real Wakanda, if you've watched that Hollywood movie. And it is possible, desirable, and affordable. Thank you.
Absolutely exceptional. Challenged